Hello. For this session, our topic will be principles of deductions and OSD or optional standard deduction. So we are now into the latter part of taxation of individuals and corporations, especially we are already at the end or almost on to the taxable income. So we are already almost done with income taxation. So what's the use of this particular topic in income taxation? So we're already done in the items of gross income. Okay, we're done with the items of gross income. And we said these items of gross income can be subject to final tax or regular income tax. Now, with these deductions and OSD or with our topics regarding deductions, this is about your gross income less your deductions to get for your taxable income. But take note, this formula is only applicable to regular income tax. Why? Because final taxation applies gross income taxation. Final taxation applies gross income taxation, meaning we tax it at gross income. And we already learned the items of income that is subject to final tax. While regular income taxation applies to net income taxation. Since we apply net income taxation, we follow this formula. And that is gross income less deductions to get for your taxable income. Therefore, deductions only apply to items of regular income tax. So we need to learn, again, what are the items to be placed in your regular income tax. And now we are learning what are the items of deduction to get for your taxable income. So in this in this sense, we need to learn first what are the principles of deductions, and we need to learn what are the items of deductions. Okay, so let's start. Deductions. What is a deduction? A deduction is an expense incurred by the taxpayer that is allowed by law to be deducted against the income of the taxpayer. Actually, this definition is one-sided because when we say deduction, these are items to be deducted to the gross income. These are items to be deducted from gross income. But if we look into this particular definition, it says here expenses incurred by the taxpayer that is allowed by law to be deducted against the income of the taxpayer. If you will only learn deductions with this concept, this particular definition only applies to itemized deductions because itemized deductions are the actual expenses or actual items of deductions. Later, you will learn that your deductions are not only itemized. We have two concepts of deductions that can either be itemized or your OSD or optional standard deduction. For this session, we will learn about OSD, but also we will tackle some items of itemized or principles relating to itemized. Again, when we say deductions, these are items deducted to the gross income. So with our formula, gross income less your deductions to get for your taxable income. These deductions are the items deducted to gross income. So please do not mistake that deductions only applies to expenses incurred by the taxpayer. Okay, so deductions does not only apply to expenses incurred by the taxpayer because deductions are all items deducted to the gross income. And when we say deductions, there are two modes. It can either be itemized or OSD. And this particular definition here applies to itemized deduction. Apply to itemized deduction. General rule, when we say expenses, this relates to business expenses. Why? Because the rule for your deduction from gross income, this applies only on individuals and corporations who are professionals or in business or trade. So in practice of profession or in business or trade. So take note, deductions only apply to those who are in the practice of profession or who are in business or trade. That's why when we talk about expenses, it applies only to business expenses. Sir, how about if I am a compensation income earner? Can I apply deductions? No, because one item of non-deductible expenses are personal living and family expenses. This does not relate to your income. Okay? So one reason that's why compensation income earners does not deduct any expenses because what can only be deducted are business expenses. So expenses in pursuant to your profession, business, or trade. Okay? So rule, only business expenses pursuant to profession, business, or trade. So let's go now to your non-deductible expenses. So what if you are in the business of you are in the business or you are in trade or you are in a practice of profession? Are all your expenses deductible? So yun na yung tanong natin. So ang rule natin, business expenses. So lahat ba ng expenses mo deductible? No. So what are those non-deductible? So we have here your first item, personal, living, and family expenses. Because again, what can only be deducted are business expenses. So in pursuance of practice of profession, business, or trade. Another is the amount paid for new buildings for permanent or betterments made to increase the value of any property or estate. This item of non-deductible expenses is consists of two main non-deductible expense. The first is for new buildings. The second is for permanent or betterments. Okay, so we go first with your new buildings. Here, the amount paid for new buildings cannot be deducted in full. Okay, so what we do is we capitalize it. We capitalize. What do we mean by capitalize, sir? So instead of expensing it, our tax code provides of capitalization. When we say capitalization, it must be part of your total assets. So instead of expensing it, we place it in your total assets and we will only depreciate it. So the amount paid for new buildings, we will not expense it, but we will capitalize it as part of your assets and we will depreciate it. So no outright deduction for your payment for new buildings. How about permanent or betterments made to increase the value of any property or estate? What is this permanent or betterments? What is this particular betterment? This pertains to any repairs or subsequent expenditures to property. Okay? So these are repairs or subsequent expenditures to property. So in layman's term, it is only repair. But actually, under the law, this is considered permanent or betterments. Okay? So permanent betterments, these are subsequent expenditures. But take note, not all subsequent expenditures should be non-deductible. Not all subsequent expenditures are non-deductible. So general rule, not all are non-deductible. Okay? The exception is if that particular subsequent expenditure increase the value of the property. This goes now to the concept of your repairs as a normal repair or a capital repair. So it is either a revenue expenditures, those continuing repairs, those actual repairs that is normal to the operation of the business. So every year, let's say you have a repair, that is considered a normal repair. But if that is a capital repair, let's say that repair really will increase the life of the asset or will increase the value of the asset, then it will not be non-deductible. So a normal repair is deductible, while a capital repair is non-deductible. Okay, so again, for number two, permanent or betterments made to increase the value of any property or state. This pertains to repairs or subsequent expenditures to property. The general rule is not all are non-deductible. So the general rule is it is deductible. Okay? But the exception to the rule if it increases the value of the property. In short, if it's normal repair, it is deductible. But if it increases the value of the property, such as it is a capital repair, it is non-deductible. Now, what is the treatment of the non-deductible repair? It will be included on the cost of the property, and it will be depreciated. It will be depreciated. So actually, non-deductibility here is a misnomer. This personal living and family expenses, you will never ever deduct it. But these items, as to the payment of new buildings and for your repairs, although you will not deduct it at the time you expense it, so it is non-deductible at the time of expense, but it can be deductible by virtue of your depreciation. Okay? So what's the difference? In number one, you can never ever deduct it. In number two, you can still deduct it by virtue of depreciation because these items will be included to the cost of the property and it will be depreciated over the life of the property. Third, we have your expense in restoring property. Expense in restoring property, same as through number two. Same as through number two. These items are non-deductible at the time of incurrence of the expense. However, this particular expense in restoration of the property will result to a betterment of the property, resulting to the increase of the value of any property or estate. Therefore, it will be capitalized as part of your cost of the property. Therefore, it will be depreciated over the life of the property. Okay? So, number one, permanently non-deductible. Number two and number three, it can be capitalized as part of the cost and can be depreciated. So in short, it can still be claimed as an expense, but over the life of the property. Okay? So again, what are the rules relating to deductions from gross income? The first rule that we learned, there are two modes of deduction that can either be itemized or OSD. So when we say itemized, these are the items of expenses. For OSD, this is an optional standard deduction. So there is a standard deduction and it is optional. And when we talk about deductions from gross income, this applies only to regular income taxation and those who are into practice of profession, business, or trade. Finally, not all expenses are deductible because some expenses are non-deductible. Items are first, we have your personal living and family expenses. Why? Because it is not connected to your practice of profession, business, or trade. Number two and number three are also non-deductible because the treatment is it is to be added as part of your cost of the asset and it will be depreciated over the life of the asset. And then we talk now of how to apply this particular deductions. Okay, so take note guys, we need to first learn what items of expenses can we include and what items are to be excluded. So deductions from gross income depends upon the taxpayer and his source of income. So we put emphasis here depends upon the taxpayer and his source of income. So on your taxpayer, it depends if the taxpayer is an individual or a corporation. Individual or corporation. Because there are different rules applying to or can be applied to your individual or corporation. So magkaiba yung rules natin dyan. Later on, when we go to your itemized deductions, mas mafe-feel nyo yung difference niya because there are different rates applicable to individual and applicable to corporation. And finally, as to your source of income, take note, your source of income should either be either final tax or regular income tax. And deductions applies only to regular income tax. And again, for your regular income tax, we have your compensation income or your practice of profession, business, or trade. And your deductions only applies to those who are practicing profession, business, or trade. Okay? Remember, we said that your individuals can be grouped either as employed or self-employed. So only those individuals who are self-employed can use deduction. How about corporations? Corporations cannot be employed. They are always in the practice of business, trade, or profession. Therefore, corporation can always apply deduction. Okay, we go back on your depends upon the taxpayer. Okay, so it depends whether the taxpayer is individual or corporation. And on your source of income, we have either a taxation on your final tax or regular income tax. And we made clear that deductions only applies to regular income tax. And when we go to your regular income tax, normal items of income are compensation and income from practice of profession, business, or trade. We say that deductions only apply to your practice of profession, business, or trade. And if we try to remember, individuals, we said before, can be grouped as either employed or self-employed. Deductions only apply to self-employed individuals. Further, for corporations, they are always either in the practice of profession, business, or trade. Therefore, deductions apply always to corporation, but for individuals, only to self-employed individuals. So what are the general rules on your deductions? A taxpayer seeking a deduction must point to specific provisions of the statute authorizing the deduction. Why? Because of the strictissimi juris concept, di ba? Okay? Di ba sabi natin, to those who will get deduction, it is to him to point to the law where to claim that deduction. So there must be a specific deduction that is provided by the law before you can claim a deduction. This is because of your strictissimi juris concept. Next, must be able to prove that he is entitled to the deduction. Okay? So, must be able to prove that you are really entitled to the deduction. So, take note, this is again, both 1 and 2 is in consonance with your strictissimi juris rule. Okay? So, you must point the specific deduction. So, you have the burden to prove that there is really a deduction and that you are entitled for the deduction. So what are the mode of claiming deductions? Take note, only self-employed taxpayers or having business may claim deduction. So for individuals, it is only your self-employed. But for corporations, always, okay? So there are two modes. What are the two modes? We have your optional standard deduction and we have your itemized deduction. For optional standard deduction, this can be applied whether individual or corporation. Itemized deduction can still be applied whether individual or corporation. However, for itemized deductions, we have 3 items of itemized deduction. 3 items. And what are those 3 items? The first item is your regular itemized deduction. Regular itemized, these are the normal expenses of the business. Next, you have your special itemized deduction. These are deductions provided by law. Third, we have your net operating loss carryover. This is a deduction by virtue of your operating loss. Okay, so previous year operating loss. We will learn that when we go to your itemized deduction. Okay, so this is again provided by law. So when we have itemized deduction, we have three items: regular itemized deduction, special itemized deduction, and net operating loss carryover. It can be applied whether it is individual or corporation. How about an optional standard deduction? An optional standard deduction, from the word itself, it is optional and it is standard. So we need to learn when do we apply it because it is optional, right? So kailan ba natin siya gagamitin or gagawing option? And it is standard because we have a rate of 40% as a deduction. Okay, since there are two modes, take note these are exclusive. When we say exclusive, you can use itemize, you can use OSD, but you cannot make use of both. Again, you can make use of Itemize, you can make use of OSD, but you cannot make use of both. Therefore, it's either Itemize or it's either OSD. For Itemize, you have the three items. For OSD, you have an optional 40% rate. Okay? For this session, we will only dwell first on OSD, and Itemized deduction will be for another session. Okay? So for this session, we will only go with OSD, but not itemized deductions. But as early as now, I'm telling you, itemized deduction is composed of these three items. Regular items are your normal expenses. Special itemized deductions are provided by law. NOLCO is provided because of your operating loss. So it is a deduction because of your operating loss provided again by your law. While OSD, it is both optional and it is both standard. Optional because you will elect it. Standard because you have a standard rate of 40%. Now, we go with your principles of deduction. So these are principles of deduction applicable mostly to your itemize. Okay? These principles of deductions apply mostly to your itemize. Okay? Why? Because there are items of expenses that we need to deduct here. And we need to learn whether they are really deductible or not using these principles. While in your OSD, we do not need these items because it is optional and it is standard. So no need to prove, no need to prove. Okay? So principles of deductions applicable to itemize. First, you have your loan principle. So what is this loan principle? First, it must be legitimate. It must be ordinary. It is actual and it must be necessary. Take note for this particular expense, it must be in pursuance of your business, profession, or your trade. Unless it is not in pursuance of your legitimate, ordinary, actual, necessary expense, then we cannot deduct it. Okay? So this principle of deductions provide you rules when to deduct and when not to. So in your loan principle, it must be really connected to your business. Next, we have your matching principle. It must be matched to the earnings. It must be matched to your earnings. So this is most likely considered as part of your accounting principle, also your matching principle. So you can only deduct expenses that is related to your earnings. All items not related to your earnings should not be deducted. Another rule is your related party rule. So in your related parties, we have here your different individuals and corporations who are parties or related with each other. So normally corporations, we have related parties, especially if there are subsidiaries or if ever there are controlling interests from one corporation to another corporation. The rule under your related party is gains are taxable, but losses are not deductible. So the rule is losses are always not deductible. Why? Because this is to avoid bad debts, losses, and interest expenses. So, for example, related party 1 will provide a loan to related party 2. And then related party 1 will just tell that it is already considered as a loss because related party 1 cannot collect it from related party 2. So, the problem here is that if ever, diba, parang Corp 1, Corp 2, So magta-transfer na lang siya ng funds kay Corp 2. Pero ang palabas si Corp 1, it is considered a loan. Tapos sasabihin niya, loss na yan because I cannot collect it. So if ever, this loss will not be deducted. Why? Because actually there was no loss. There was no loss. Ito lang, ginawa to ng law natin para maiwasan tong mga to na tipong sasabihin na may loss pero wala naman. Why? Because if you transfer funds to corporation 2, this can be considered as a dividend subject to tax. But if you will say that is a loan and then finally a loss, kumita na nga si Corp 2, nagkaroon ka pa ng deduction kay Corp 1. So parang doble-doble na siya. So para maiwasan tong gagawin ng mga related parties, this is the rule. Any loss should not be deducted. And why? Because that is to avoid bad debts, any losses, and interest expenses by virtue of the relationship between Corporation 1 and Corporation 2. Oh, tignan nyo dun sa loan. Dun sa loan pa lang, may expense na si Corp 2. May income si Corp 1. Yung income, pwede nating i-allow yan kasi nga, gains are taxable. But if ever sinabi ni Corp 1 na bad debt yan, bawal yan. Why? Because of the related party rule. Okay? So parang ginogoyo nyo or niloloko nyo yung law pagka ganyan yung ginagawa natin. And the law provided enough safeguards so that related parties will not do this one. Okay? So in your related party rule, just take note of this. All gains or income are taxable between related parties, but losses are not deductible. And finally, we have your withholding rule, which is very important. Ito yung pinaka-importante actually in your practice, the withholding rule. Because if you will not withhold, then you cannot claim for the deduction. So for example, you will have an expense. So in having that expense, you need to pay, right? You need to pay. So we have here Corp 1 and let's say individual. You will pay an expense. So it is considered an expense on you, Corp 1, and to individual, it is considered an income. So that expense will be considered as a deduction. You must claim a withholding tax. So for example, yung total expense mo 50,000. So ang income niya dapat 50,000. Pero dapat mag-withhold ka dyan. So let's say your withholding is 5%. Because without withholding, you cannot claim a deduction. Okay? So take note, a deduction is not allowed unless there is a withholding under your withholding rule. Okay? So we have here an expense. As the income payer, we must withhold. We must withhold. Because without withholding, you cannot claim it as an expense. Normally, expenses are not deducted because of this. No withholding, no expense. Okay? So in your practice zone, this is really important. You must withhold. We do not have a problem with your expenses because normally they are really necessary. They are connected to the business. But the most problem applies with your withholding because if ever you did not withhold, you cannot deduct. And normally, taxpayers forgets to withhold. Taxpayers forgets to withhold. And by that, you cannot claim the deduction. So even if it is legitimate, ordinary, actual, and necessary, if you did not withhold, then wala pa din. Wala pa din. So kumbaga, catch all tong expense na to. Tong rule na to as to deduction withholding rule. Because even if may tamang expense, walang withholding, you cannot still claim. You cannot still claim. Okay? So again, these principles of deductions applies only to itemized deductions. So soon, when we go to your itemized deductions, even if we will discuss it one by one, you must meet these principles of deductions. Clear? Okay. We go now to your OSD. We go now to your OSD. So what is OSD? OSD is one mode of deduction. It is a mode of deduction wherein we have here the option to elect it, and we have a standard rate as a deduction. Optional standard deduction. It is a mode of deduction wherein we have the option to elect it as a deduction and we have a standard rate of a deduction. So we need to know when, who, and how to apply it. So we start with when to apply. We start with when to apply. So when do we apply OSD? So we apply it by election kasi nga optional siya. So you must first elect it. The question is, when do we elect it? So we look whether you are an individual or you are a corporation. If you are an individual, you must indicate it in your annual ITR. Therefore, nasabi naman natin dati, di ba? If ever it is regular income tax, you have quarterly income tax, and you have an annual ITR. For individual, you can already, as early as first quarter, you can already elect it. However, kahit pa sa annual ITR mo yan i-elect, pwede lang. So dito, pwede kahit kailan. Okay? Anytime. Whether it is quarterly or in your annual ITR. But in your corporation, you must indicate it in your first quarter ITR. Sir, what if I will indicate it on my second quarter or annual ITR? Can I still claim OSD? No, because under the law, you must put it or you must elect it at the first quarter of your tax return. So if you forgot to elect it on your first quarter of ITR, then you cannot apply OSD. Okay? So again, you must elect it when? For individual, you can elect it on your annual ITR or your quarterly ITR. But for corporate, you can only elect it on the first quarter ITR. Subsequent ITR, second, third, and annual cannot be. It must be done on the first quarter ITR. Okay? So the option to elect depends whether it is individual or corporation. Individual, you can elect anytime. Corporation, only first quarter ITR. So who can apply? Since it can be elected by any taxpayer, therefore it can apply to all individuals. All the individuals here, meaning it can be a natural person or a juridical person. So pwedeng person talaga or pwedeng corporations. So it can apply to anyone except if you are an exempt corporation, except if you are an exempt corporation or an individual in which you have no other taxable income. Kasi parang tanga naman, exempt ka na nga, tapos wala ka naman ibang income, mag-OSD ka pa. Why? Kasi pagka ganyan yung gagawin mo, wala rin namang epekto. Wala namang epekto. Okay? So, bakit? Bakit kaya, sir? Kasi malulugi yung gobyerno. So, you have here exempt income. Ayan, ganyan yan. You have your other income, which is not exempt. So let's say you have exempt income of 1 million. You have other income not exempt, 0. Okay, so you have here 1 million income. So this is considered your gross income. However, it is exempt. Tapos mag-OSD ka. Sabihin natin 40% of 1 million. So 400,000. Di malulugi yung gobyerno kasi 0 yan. 400,000 to, magne-negative pa yan. 'Di ba? Magbabayad pa yung gobyerno sa'yo. Parang lokohan. Kaya hindi siya pwede mag-apply. Okay? So if you are an exempt corporation or individual under the law, tapos you have no other taxable income, you cannot apply that. Sir, what if I am an exempt corporation or an individual? And then you have other income. So let's say 1 million to. And then I have here 400,000. Can I apply? Yes, kasi pwede na siyang i-apply dun sa 400,000 lang. Huwag dun sa 1 million. Okay? Kasi dito, lokahan siya. Dito, pwede pa. Pwede ka mag-deduct out of 40% of 400,000 but not out of 1 million. Ganun yon. Okay? So if you are exempt corporation, no other taxable income, you cannot apply OSD. Next. If you are already subject to special or preferential tax rates. So if you are already subject to special or preferential tax rates, normally special or preferential tax rates are subjected into gross income taxation. So you don't have any deduction at all. Okay? That's why special or preferential taxation, if you are subjected to it, you cannot apply OSD. Kasi normally, subject sila sa gross income tax. Okay? Pagka special or preferential taxation. Next, subject to RIT and special or preferential tax rates. So, syempre, hindi ka na pwede mag-apply ng OSD kung subject ka sa regular income tax na subject to itemized deduction. Tapos, you have special or preferential tax rates. Dito, ang tinignan natin, RIT siya, at the same time, special. So, because of being special or preferential tax rate, bawal ka pa rin mag-apply ng OSD. Kasi nga, normally, you are subject to gross income taxation. And lastly, to non-resident alien. It cannot apply to non-resident alien. Take note, whether ETB or NETB. Pwede sa lahat ng individuals, except non-resident alien, whether ETB or NETB. Okay? Provided by the law. Provided by the law. Binigay yan ng law. So yung una, alam natin yan kasi nga, yun, parang katangahan naman na magde-deduct ka pa, eh wala na nga, exempt na nga yung income niya. Yung pangalawa naman, since they are subject to normally gross income taxation, hindi ka na pwedeng mag-deduct kasi nga they are subject to special or preferential tax rates. Yung pangatlo, same with the second one. The third one, by this provision of the law, by the provision of the law that NRA cannot apply for OSD. Why? Why kaya? Because NRA are subject to gross income taxation. You know that one. They are subject to gross income taxation. They are subject to final taxation of 25%. Therefore, you cannot deduct anything. You cannot deduct OSD. Basta ang rule, guys, ang rule natin, di ba, deductions can only be applied to those who are subject to RIT, which is subject to net income taxation. If you are subject to gross income taxation, no. And these items are subject to gross income taxation. Therefore, they cannot apply OSD. For the first one, by virtue of malulugi pa ang Pilipinas niyan. Pero yung tatlo, alam natin yan. The rule is because they are subject to gross income taxation, they cannot apply deduction. Okay? Deduction only applies to those who are subject to net income taxation. And normally, they are subject to RIT. Clear tayo dyan, eh? Who can apply? So, take note, NRA, ETB, or NETB cannot apply it because they are subject to gross income taxation. So we know now when to apply and who can apply. The next that we need to learn is how to apply. So how to apply it? So we have here either individual or corporation. So we said OSD, it is optional. So when it is optional, it must be elected. And another is it is standard. So why is it standard? Because we have a specific rate of 40%. Question, how to apply it? How to apply it? So to apply it, it is 40% of total net sales revenues or receipts for individual. Total net sales revenues or receipts. While here, 40% of gross income. Question, what is the gross income for corporation? Here, it is equal to your net sales revenues or receipts less cost of goods sold. So kung titignan nyo, we have here individuals, we have here corporation, we have here your net sales, revenues or receipts, less cost of goods sold, zero yan kay individual. Bawal ang cost of goods sold kay individual kasi nga based lang siya